All right, welcome everyone. Good morning. We put the chat up there. Go ahead and drop a comment in the chat. If you're tuning in, go ahead and check in. See some people were already commenting as well. All right, Christina, good morning. And as we do every morning, we'll just wait a couple of minutes to get live on all the different platforms and let everybody have a chance to tune in and check in here before we get started. Hope everyone's having a great Thursday, almost to the end of the week already. Man, this week flew by very fast. Very interesting week, right? I'm sure we're all very busy with how the rates have been. And we will check out today's rates here in a couple of minutes and see what's going on with the market. Good morning, everyone checking in. All right, everybody dropping comments in there. Perfect. Okay, looks like we are ready to go here. So we'll take out the chat for now and we will go ahead and get into it. So welcome, everyone. My name is Kyle Hiersche. I am the COO of the Mortgage Calculator, joined here by Nick Hiersche, our president, and Jose Gonzalez, our sales manager. We are a correspondent lender that specializes in non-QM loans. However, that does not mean we don't do conventional FHA, USDA, and today's topic, which is VA loans. So like we do every day, we're going to go into the rates for different programs for today, the actual live rates, so we can see what the market is doing. We love to compare these from day to day. Then after we do that, we're going to go into our deep dive subject, which today is VA loans. So we'll have Jose pull up some different VA quotes, talk a little bit about VA loans, and we'll do a deep dive into that. But before we do that, like we do every day, let's go ahead and get that pricer pulled up, Nick, and let's check out the actual live rates for today.
All right, let's go ahead and switch the screen here and get started. So as Kyle mentioned, this is our live rate pricing tool. This is for our mortgage professionals. If you'd like to get a full loan estimate, please get with our team. We have over 300 licensed loan officers in pretty much every state, and we're licensed in 22 states for primary homes, and we can do our business purpose investor loans in pretty much every state. So this is just going to give us a pricing indication for today. It's March 16th, just after 11 a.m. So we have live rates for all of our programs. So we're going to set up a basic scenario, 400,000 loan amount, 80% loan to value, 20% down payment. We're going to search for the best rate at a price of 99. That means one discount point in cost. And we're going to compare our programs here, conforming conventional. Then we'll go into FHA. And then we'll go into our non-QM expanded guidelines, where we have over 4,500 other programs beyond the standard programs. So first we will start with our conforming example, conventional. We'll do purchase, 30-year fixed, standard loan, primary, single family, 1 unit, Florida, Miami-Dade. And for all of our examples, we use an estimated FICO score of 760 and an estimated DTI of 40. So let's check out the rates this morning. Looks like about the same as yesterday. So 6.5 rate for one discount point in cost and an APR of 6.676. So some good options here for our conforming examples. Now let's check out our FHA rates this morning. So we'll set up the same scenario and we'll be able to compare our FHA. Many times if a customer doesn't qualify for conventional, the next option will go through as FHA, and we'll keep everything else the same so we can compare them side by side. So the FHA rates are lower, but there are additional costs to consider with FHA. There is an upfront mortgage insurance and an annual mortgage insurance. Those have gone down recently, but you always have to compare APR. So the best option here, 5.625 rate for 1 discount point in cost and an APR of 6.227. So you can compare it across apples to apples to conventional. And you see FHA is a little cheaper today for this exact scenario. So if for some reason a customer cannot qualify for conforming or FHA with the expanded guidelines of FHA, many other banks and lenders do not have other options. But fortunately, at the Mortgage Calculator, we have over 4,500 loan programs under expanded guidelines that allow us to go beyond conforming FHA and, of course, VA and USDA. So we'll check out our non-QM examples here. We're going to keep everything else the same, except now we have a new option, our income verification option, where under non-QM, we can use alternative income verification. So we can use 1-year alt doc, 2-year alt doc. We can use asset-related programs, which we've been over on a couple of these shows, business bank statements, investor DSCR, we'll go over in a second, and our most popular programs for primary homes are bank statement programs using 12 months of personal bank statements for our self-employed borrowers. Many times our self-employed borrowers, when they submit 2 years of tax returns, they oftentimes have write-offs and other things that can cause them to not qualify using those 2 years tax returns. So we're simply going to use 12 months of bank statements to actually look at their cash in the bank and determine a debt to income ratio using those 12 months of bank statements. So very different calculation, and we can typically qualify these customers where they wouldn't otherwise qualify or qualify them for more, in this case, more home if they want to purchase a more expensive home. So let's check out our rates here for our non-QM programs. They are going to be a little bit higher rates, but again, these are for customers that would not otherwise qualify. So the first alt doc option we have pop up here, 7.375 for 1 discount point in cost and an APR of 7.422. So APR is about 1 point higher, a little less than 1 point higher than conventional, and a little more than 1 point higher than the FHA option. So again, if a customer qualifies for conventional FHA, we'd love to quote those, but we also love to have all of our alternative options available as well. If you'll notice, there's dozens and dozens of different types of these non-QM bank statement options, some of them at very high rates, which may allow things like a bankruptcy or foreclosure. So a lot of different variations in the guidelines on these programs. Please get with our team to find which one of these dozens of programs would fit best for you using bank statements. Now, before we go into Jose's deep dive example, I want to pull up our investment property option. So we always do this every morning. We want to make sure we compare our investment property purchase rates as well. And we're going to compare our conforming conventional options with our non-QM expanded guideline options. Remember, FHA, VA, USDA, not eligible for investment properties. So real simple, we'll go through our 2 examples today. We'll start with conforming, set up the same exact scenario, 80% loan to value, 20% down payment, tell the computer to find the best rate at 1 discount point in cost. And we'll keep everything else the same, but we switched it to investment. So let's see our conventional investment property. Looks like a little bit higher than yesterday, if I don't recall, but these are significant discount points. So you see here a 6.75 rate, a very nice rate for our investors to look at, but there is a high discount points fee here. So the GSEs have added these additional costs to investment properties to conventional loan programs. So unfortunately, we don't have any options for 1 discount point in cost. The best option the computer found was a 6.75 rate for 3.625 discount point cost and an APR of 7.014. So many times our investors would like other options where they can many times go higher in rate. They don't mind going a little bit higher in rate if the property cash flows in order to reduce the discount points, the costs out of pocket, so they can invest in other properties. So even if we cruise down here down the sheet to a higher rate, like a 7.5 here for 2.75 discount points, still not the low discount point option that we would love to offer our investors. So that's when we go to our non-QM options, so we can compare those side by side. So we'll pull up our last scenario today for an 80 LTV loan for an investment property, and we'll check out our non-QM expanded guideline programs for investment properties. And now you'll see we have two new options pop up. So first we have to select our income verification on our non-QM programs. And our most popular program by far for investment properties is going to be our DSCR, debt service coverage ratio. And that is because there is no income or employment required from our borrower. We're simply going to use the estimated rental income from the property to see if that estimated rental income can cover the housing expense of the actual property, the PITIA of the loan we're doing. Typically, if it covers the cost, that's a DSCR ratio of over 1, and we have a ton of programs for that. We even have loan programs for ratios under 1 where the property doesn't quite cash flow. We still have programs for that. So a lot of great options here. And you'll see the other option that pops up is a prepayment penalty. That is standard on investment properties under non-QM. So most of our programs will have 3 years as a standard. We can choose 0. It'll be a little more expensive and limit our loan program options. So we'll always do 3 years for our demo here today. And we can even choose 5 years if we want to save a little bit more money. But again, we'll choose 3 years today so we get the most loan options. Now let's check out our DSCR rates this morning. So again, amazing when we see these DSCR rates, dropping. So just last week, these were in the mid 8s. Now we're in the high 7s. So we love to see our non-QM DSCR rates dropping. The best combo the computer found here is a 7.75 rate for 0.85 in discount points and the final APR of 7.792. So amazing comparison there when you compare apples to apples side by side on the conventional versus the non-QM DSCR. Remember, almost comparable APRs here, and DSCR comes with a lot of benefits. You can do multiple loans at the same time. It doesn't require any employment or income verification. So many of our investors will cash out 2 or 3 properties in order to purchase 2 or 3 more, and we can start all those loans at the same time. So a lot of great benefits with DSCR types of loans. And as you can see here, we have a ton of different options with different ratios, with different prepayment penalties, such as a fixed prepayment penalty, and obviously different rate combos. So some of these programs may allow things like short-term rental income. Please get with our team. We would love to navigate you through all these different options that we have to find the one that fits your scenario best. So that's it for our live demo today. Let me pull up the other screen and we'll get into our deep dive topic. So today we are going to be talking about VA loans. So Jose is going to go into a deep dive example. Since we don't do these every day on the live rate show, Jose is going to show us a deep dive example into the VA loans. Remember, only eligible veterans are eligible for VA loans. That's why we don't always do it live on the demo. But if you are an eligible veteran, there are some amazing benefits that come with VA. It's one of the best, if not the best, loan types if you do qualify. So definitely recommend, if you are an eligible veteran, you do take advantage of your benefits there. And it's a great program with a lot of flexibility. I'm sure Jose has a couple bells and whistles here that he'll show you with some special stuff. But the standard VA with 100% LTV is pretty amazing. A lot of great benefits for our vets there. And let's go ahead and get into it. Jose, you got a couple examples for us?
Yes, sir. All right. Little recap here. VA loans are for our veterans and active military only. One interesting note is that if you do have a co-borrower in a VA loan, borrower and co-borrower need to be married. You cannot have unmarried borrower and co-borrower on a VA loan. So, and we can do 100% refis on the VA, which is going to be a really interesting one I'm going to show you here. So for our first example is our standard cookie cutter 100% LTV single family residence. And here you can see lowest cost option, 6.75%. This is for $500,000 loan and a $500,000 purchase. Our borrower does have premium 800 credit score. So you see lowest cost option 6.75, lowest rate option 5.375. Now, this example here I'm showing is for a VA borrower who is exempt from the VA funding fee. VA does not charge mortgage insurance. That's really interesting to note. However, they do charge a funding fee, which can be anywhere from 2.3% and up, depending on if it's their first use or a subsequent use of their VA loan entitlement. So now this is for a 1 unit, but I wanted to show you here, really interesting note. This is for a 2 unit, so you can purchase a 2 unit property, commonly known as a duplex, with a VA loan, and you will note that there are no loan level price adjustments. It is basically same exact rate. That's the 1 unit, and that's the 2 unit. And now we have a triplex that you can do, a 3 unit, 100%. Notice now these are all 100% financing options. So now we have a 3 unit property here, same exact rates. Oh, one thing I wanted to mention, I was talking about the funding fee. I did forget to note that our service members or veterans that have at least a 10% or greater service-related disability are exempt from the VA funding fee. So most of the applications I've been seeing for VA have had that at least 10% or greater disability, and most of them are getting exempt from the funding fee.
Typically,
So-
that'll be printed on the COE, correct, Jose?
Yes, sir. That is on the certificate of eligibility. They may have another document. They usually have some disability documents and all that, but the COE is going to have all of the data, that you're going to need. It's going to have the entitlement amount. It's going to have a code on there that you're also going to need to input in your VA management screen. So, and it's going to note if they have service-related disability and are then exempt from the funding fee. So this one here is our ultimate house hack 4 unit, 100% LTV, owner occupied purchase here. Amazing option, right? 4 unit, 100% financing, VA. Most of the time, we don't consider 2, 3, and 4 units for VA purchasers, but it is an option, and now more important than ever. Now we have some refinance options. Now this is a 100% LTV refinance. It's going to be the same 1, 2, 3, 4 unit. I just put here the 1 unit option. The interesting thing to note about the EARL is that it is a no income and no appraisal loan option, right? So
And no credit score.
So, but it is VA to VA. So what they're going to look at is payment history on the loan. So you do have to be current, and they are going to look at payment history on the loan. But that's the only thing that they're going to look at. They're not going to look at anything else. So obviously it's a no cash out option, but it is a very good option. But just remember, they have to be refinancing a VA loan to do the EARL. That's why they do it without an appraisal, because you already had one previously done, right? So again, very good option. Rates, are a little bit higher on the EARL, but not much. So now our traditional 90% LTV VA cash out refi. Now, mind you, VA does allow 100% LTV on the cash outs, but pretty much almost all the lenders, I'm not going to say all, but almost all the investors out there put an overlay on it so that they only go up to 90%. And this is, full doc, full income, all that kind of stuff. And then the same if the borrower is a veteran with at least a 10% or more service related disability, still applicable on the cash outs. They can still waive the funding fee. And a little bit outside the box here, 100% LTV VA renovation loan, right? You can do it. You can do those renovation loans, FHA. You can do them conventional. You can do them USDA, and you can do them VA. So this is a really good option here. They're buying that property. It has condition issues like we discussed the other day. Maybe something that doesn't allow it to be financed because it's a code violations. It's not going to pass the VA appraisal conditions, which is VA appraisals can be a little bit strict on property condition. They want to make sure it's totally livable, no issues at all that could impact the life or health of the occupants. So very good option. Remodel kitchen, buying that house, needs a new kitchen, needs new bathroom, needs flooring, needs new roof, AC, windows, whatever you want to do. The VA renovation loan will let you do it for a VA loan. Very good rates here. You see, 6.25 as our lowest cost option, and you can buy it down all the way to 5.5%. So these are a few different examples how you can use a VA loan. It's not just for a 1-unit property, 1 to 4 units, 100% LTV refi, 90% LTV cash out refi, 100% LTV renovation loans. So those of you that are out there in areas that VA loans are prominent, Air Force bases, any military bases that tend to have a lot of VA loans, take advantage of all these opportunities because, as you can see, VA loans do have pretty good rates, usually lower rates than conventional.
Nice. We also have the one-time close VA as well, now that you're talking about the renovation, correct?
Yes, sir. Another very good option. One-time close where the loan for construction rolls over and becomes the end loan for the property. You don't have to have 2 separate loans. You don't have to have 2 closings. One loan, one closing for the whole deal.
So that would be to, instead of just renovating a property, to buy land and build a brand new home, a spec home, basically on a piece of land,
correct,
etc.
Everybody's dream. Build
Yep.
it the way they want it.
So we got one good question in here. Let me pop up this question from Lisa for you, Jose. Can they use the income on a 2, 3, 4 unit?
Yes, absolutely. That is the idea here. When it's a purchase, right? Because there's 2 ways to look at this. One is if it's 3 ways to look at it. You have a purchase or you have a refi where you have an unseasoned rental or a refi with a seasoned rental. What does that mean? Okay. When you are purchasing the property and it's a 2-unit property, you're going to have and it's an owner occupied property, that you're buying. You're going to have the primary unit. Obviously, there's not going to be any income generated by the unit the buyer is going to live in. But then you have the second unit, which is going to be the rental component, which is going to be considered an unseasoned rental because they're buying the property. They haven't reported it yet on a tax return. So on unseasoned rentals, you will receive 75% of the market rent. Now, if there's currently a tenant in that property, then they'll probably use the lower of the lease or the 1007 market rent, or in this case, it's going to be a 216 operating and income expense statement for a 2 to 4 unit property is what they use. They don't use a 1007. So we will be able to capture 75% of the rental income that's on that report or the lease, whichever is lower, right? That's for a purchase. On a refi, if it's an unseasoned rental because you purchase a property within the last 12 months or haven't put it on a tax return yet, let's say, right? So it hasn't been yet reported. So that's still considered unseasoned rental. You will be able to get 75% of the lease you will have to show, at least 3 months receipt of that lease payment. And then if it is a refinance where it's a property that you've already placed on your tax returns, now it's already a seasoned rental, then we will look at the Schedule E, run it through the Schedule E income calculator to arrive at a net income for that property. And then that is the amount of income that will be allowed from the rental.
And to be clear, that's for 2, 3, and 4, correct? 75% of all extra units they're not living in, right? We can't use.
Correct. Absolutely.
All right. One more question just popped in from Adam here, Jose. You touched on this earlier, but can you clarify, please?
Yes. Okay. Question. If married, do both spouses have to be veterans to apply jointly? No. You only need one of the borrowers or co-borrower. In this case, the borrower would be the veteran, whether it's, whichever of the two spouses is the veteran would be the borrower, and then the other spouse would be a co-borrower. And a little aside here, my brother actually had to get married to his wife because I did his VA loan and they weren't married. So I'm like, hey man, if you want to do the loan, you got to get married. They got married.
And so it's the other part of his question was just primary is required to be a veteran. So yes, the primary as in the borrower always, right? So our borrower is going to be the vet. The co-borrower will be the non-vet. Correct?
Yes.
Cool. All right. That's it for questions. You want to wrap it up, Kyle?
Yeah, absolutely. Perfect. That was great. So I know a lot of you probably saw that there's more options than just a typical VA loan, right? That was great, Jose. I'm sure a lot of us didn't know all these other options that we have. So that's why it's great to do these deep dives every day. It's a loan program you might think you know, but sometimes you don't know everything, right? So we do this show 11 a.m. Eastern every weekday morning so that you can tune in and see how the rates fluctuate and do a deep dive into a different program. And we have 350 loan officers all across the country. And as Nick said, licensed in 22 states, and we can do business purpose loans in most states as well. And our loan officers are trained on not just conventional and FHA, USDA, and VA, but also non-QM loans like Nick was talking about, the bank statements, the DSCR loans, and they are trained as consultants so they can walk you through these different processes, just like this VA loan where there's multiple ways to approach the situation. Just like every loan, there's multiple programs, multiple ways to look at it, and multiple ways to go about closing that loan. So our loan officers can walk you through that. So if you're looking to partner with one of our loan officers, they can send you an actual quote, just like Jose pulled up those quotes. They can send you one of those quotes within minutes for your exact scenario. So go ahead and visit us at themortgagecalculator.com and we can pair you up with one of our loan officer consultants, or you can email us info@themortgagecalculator.com. Thank you everyone for tuning in. Thank you, Jose. Thank you, Nick. We appreciate it. And hopefully we will see you all tomorrow at 11 a.m. Eastern time. Take care, everybody. Have a great day.
Thanks, everyone.